Hello, agentpreneurs, and welcome to episode 57 of the Daily List Report. We've got an amazing show for you today. We've got Amy Myers from Ovation Credit. Credit is always important. It's incredibly important right now, and she's going to talk with us a little bit about some tips and tricks and how they can help you and your consumers improve your credit score. Before we get to that, we've got our YouTube channel up here right now. You're watching this on YouTube. If you like the content, make sure you subscribe. We've got 56 episodes of amazing content prior to today. Today's might just be your favorite. You can be the judge of that. We'll find out here real soon. So with that, I'm going to bring on Amy Myers. She is Senior Director, Strategic Partnerships at Ovation Credit Services. Ovation Credit was named by Money Magazine as one of the 3 best credit repair companies of 2020. They have an A+ rating with the Better Business Bureau. And frankly, Amy is a super delightful person. So I'm going to bring Amy on right now to say hello to everybody.
Hello. Thank you so much for having me today. I'm really looking forward to speaking with you and all of your listeners about something that is incredibly important, especially in today's marketplace, and that's their credit.
Absolutely. Absolutely, Amy. So, I have maybe just a quick background question. I really want people to get to know our guests and our partners. And so, how long you've been doing this? How did you get into this business? What about this industry is so fascinating to you?
So I grew up in a household that was full of mortgage brokers. My mom worked for the Farmers Home Administration, so she did mortgages her entire life. So from the time I could toddle around the office, I was subjected to the mortgage industry. And then I joined Ovation Credit Services about 6.5 years ago as the business development. And what I do is I work with lenders, with lead aggregators in order to bring them into our business. I also used to be primarily responsible for the day-to-day operation of our call center. So I've seen every aspect, front and back, forward, inside and out, of how we manage our business as a credit repair company and how we provide the best service to our consumers to really help them navigate through credit repair, credit education. And it's really been a wonderful experience because at the end of the day, I can go home, I can go to sleep and know that what we're doing is helping people and making their lives better.
Oh, that's a great answer, right? And I think it's indicative of one of the reasons why we partnered together, and we'll talk about that in just a little bit, Amy. And just to your point, it's got to be very rewarding, right? You have people out there who, a lot of people have mistakes on the credit report that they're unaware of, right? Maybe just talk a little bit about foundation. Like, we all know on some level that a credit score is important, but I don't think people appreciate deeply how important it is and frankly how much money it costs you. And further, that there are companies like yourself who can help you actually improve your credit score. So maybe talk a little bit about the foundations of credit scores and in this context.
Of course, and you've really hit the nail on the head on a number of levels. In America, we have our children go through 13 years of school, and as they go through their education, they then graduate and they're sent out into the world, off to college to be an adult. And by the time they're sent off, they haven't, in many cases, had basic education about how to manage a budget, how to manage credit, what is the impact of credit, and if you improperly manage your credit, what is that going to ultimately do for you, not only in the short run, but for the long term. And so at Ovation Credit, we really work on focusing on not only helping people who have challenges with their credit, but education. And 20% of Americans have information on their credit report right now that would prevent them or could potentially prevent them from getting approval or cause them to have higher interest rates than what they could potentially have.
That's staggering, Amy.
Yeah, 20%, 1 in 5. So I'm sure if you aren't that person, then you definitely know somebody who is facing credit challenges. When you think about the sharp rise in the number of identity theft cases that we face every single day, and that's a huge problem for Americans. And so many people think, oh my goodness, somebody stole my identity. What do I do? How do I manage it? How do I get this fixed? How do I get them to stop calling me trying to collect on this debt? Well, there's companies out there such as Ovation Credit that can really help you work through that process and put you back on the road to a healthy credit score and a credit profile.
Yeah. You know, Amy, what's really interesting about what you just said, and I hadn't thought about this before, is that,
Mhm.
to our agents out there, right? You're working with buyers, you're working with sellers, and there are
Mhm.
people who clearly know that their credit score isn't great, right? But I
Yeah.
think when you talk about 1 in 5 Americans, have basically the opportunity to increase their credit score, that suggests to me that there's a lot of people out there who think that they have a good or pretty good credit score that could actually be better and
Mhm.
don't maybe appreciate the difference in those extra 20, 30, 40 points, whatever it might be,
Oh,
and how much
absolutely.
actually that saves you. It's people think about money. To your point about education, which is a great point, Amy, is the stuff that happens like down the road, like a 30-year this and a difference in an eighth of a point on a rate, right?
Mhm.
You think about it on a monthly basis, you're like, oh, it's only $25 or whatever, right? But this
Mhm.
adds up over time to thousands and thousands of dollars. So maybe there's an opportunity for our agents to actually reach out to people to say, look, you may think you have a good credit score, but it could actually be better. And that's going to save you money. Like there's no
Mhm.
downside to this, right? You can only go up. You're not going to work with a company like you and lower your credit score. You're only going to go up.
Right. Yeah, when you think about it, you've got a couple of things that you should really focus on. Let's say you're somebody who's trying to buy a home, and yeah, you've got pretty good credit. Let's say it's 620. But if you look at how banks are really locking down and really tightening their belts on offering credit to consumers, just based on the general economics that we're going through right now, um, if you can get your score up 20, 40, 60 points, um, and let's think about being an A credit versus an A plus credit.
Yeah,
When you look at the life of the loan, you're potentially saving 100,000 or more on interest charges alone over the life of 30
that's
years.
wild.
And I don't
Yeah,
know about you, but I don't have an extra $100,000
no,
just laying around to give away.
definitely
I
not.
can take that money and invest it in my retirement, invest it in my children. That's a lot of money that could potentially put your kids through school. So thinking about it before you start the process of buying a house, and let's just do a health check. Let's look at what's going on. Let's see if there's opportunities to improve that score prior to applying for a mortgage. And it could save you so much money. It could be the difference from getting a 2 bedroom condo versus having that 3 bedroom, 3 bath, single family home with a beautiful yard. You can afford a lot
Absolutely.
more.
Absolutely. And we'll
Mhm.
talk about in a little bit sort of how the service works and costs and things like that. But I can tell
Sure.
you it's given the potential benefit and reward, it's very reasonably priced. Like it really isn't a lot
Mhm.
of money for, the benefit that you can get. Amy, let's switch gears a little bit because
Sure.
we are in an unprecedented time right now, clearly. Right? There's a
Mhm.
lot going on in the world. There's 30 plus million people who've lost their jobs.
Yeah.
What's your advice to people, right? Our hearts go out to everybody who's lost their jobs, but there's people now who are maybe some of the stimulus money is running out and they've got some credit cards that they can use. How should they be thinking
Mhm.
about optimizing how they pay, what they pay for right now to make sure that they can protect their credit score?
Well, I don't want to look at the past, but ultimately, I hope the people who have lost their jobs have thought about this type of a scenario and have put a nest egg away. I always suggest that individuals try to build up that nest egg to where you have 6 months of savings. I know some people say 30 days, but 30 days passes really quickly when you're
Really
trying to
quickly.
find a new job, a new career. So I always suggest that we look at a 6 month saving plan. Now, we all know that not everybody has that 6 month saving plan. So if you're one of those unfortunate millions of people who have lost their job, the key to protecting yourself, protecting your home, your car, your credit itself is communication. I encourage everybody to make sure that you're communicating with your creditors, telling them what's going on, showing them due diligence, that you're working to get back into a position, that you're making those efforts to bring back the income, and ask for forbearances. Ask them to work with you on this. You're committed to paying the debt. You're committed to making sure that they get the money in the end. Um, and I'm hearing beautiful stories from creditors about what they're doing for their clients in order to help them through this unprecedented time.
Yeah.
But you can't just ignore it. You have to have that communication, or they don't know what you're going through, and they can't help you if they don't know. So that's the biggest thing. Reach out, have that communication, document that communication. Do it not only over the phone, but follow up with those emails so you have written proof of the conversations that you've had.
I think that's excellent advice, Amy. I
Mm-hmm.
think that a lot of people, especially when you're going through really difficult times, sort of go into a bit of a shell, right? And
Oh, it's so
what
easy.
right, it's so easy to do. All of us have done this in various points in our lives. And I think as an
Mm-hmm.
agent, your responsibility to your sphere of influence as an influencer to that is to make sure that you're reaching out to people, in particular people who've been affected by this, and say, look, if you do that, your creditors are going to assume the worst. They have to. If you're not talking to them, they
Yeah.
have to assume the worst. And
Mm-hmm.
here's the point. We've seen this with the forbearance, right? So the FHFA came out early on, and they basically said, if you can't pay your mortgage, don't pay your mortgage. And the mortgage industry, frankly, freaked out, right? It's like, whoa, whoa,
Oh,
whoa!
yeah.
Like we didn't model for this, right? We didn't model for 8%, 9% of people not paying their mortgage. But to your point about these heartwarming stories, they figured it out. They did. They renegotiated. They figured this out, and people are able to sort of get by here. But you have to
Mm-hmm.
communicate for that to happen. So I'm so glad you brought that up, Amy, because I think that's one of the most important things that people can do today, and that you can advise your buyers and your sellers, is to make sure that if you're not in a position to pay your bills, you're actually having a conversation, a dialogue. Because frankly,
Yeah.
they want to get paid, and if you don't talk to them, they don't know that you want to pay them, and they're willing to
Yeah.
work with you probably now. I mean, maybe more than ever before, frankly.
These creditors, they don't want to take your house. They
They do
don't want to
not.
take your car. They want to work with you. They want to find a way to make it work. But on the flip side, we also have to show due diligence that we're doing everything we can in order to make good on that debt. Maybe you can't pay your entire car payment. Maybe you can't pay your entire mortgage. But if you can pay something, that gives them the ability to help us even further, because they're sitting there not collecting just as much as we're sitting here not collecting income.
Yes,
It trickles all the way up. So we need to keep that
absolutely.
in mind, and do our best to help the creditors to be able to help us.
Yes,
So
yeah,
paying a little bit is going to be better than paying nothing. And it's going to show them that you are truly putting forth the effort to work with them. And they'll do the same
absolutely.
for you.
They will. They absolutely will.
Mhm.
Amy, that makes me think of something. Is all credit created equal? What I mean by that is if I'm in a position where I just simply can't pay all of my bills, right?
Mhm.
Is not paying a car payment different than not paying a house payment, different than not paying a cell phone payment? Like, is all credit created equal, or are they different?
I would say they're different in the way they impact your life. I'm not trying to upset any particular credit segment, but you got to think about, what does it take to live? If you
Yes.
default on your mortgage and you lose your home, that's a huge impact on your family. If you don't default on your car and your car's repossessed, you may not have transportation to get to that job to be able to support your family. Um,
Yes.
if you default on your credit cards, that's going to have a long-term impact on your ability to get credit and on how much you have to pay in order to get that credit. So yeah, I would think of it in tiers, but you need to communicate, and you need to do your best to pay a little bit to each partner, because they have loaned you money in good faith, knowing that they're going to get that money back. So let's look at it that way. First and foremost, take care of your health and your family. Put food on the table. Keep the lights on. Keep your house and your car, and then go from there. And that's one of the great things that Ovation can provide to a consumer is we have an online dashboard that allows you to build a budget, regardless of what your income is, whether it's unemployment, whether it's the tax supplements that they're giving to people, or if you are getting into a job and maybe it pays a little bit less than what you're used to making. But it allows you to build a budget and see what happens. It does a lot of if this, then that scenarios. So if you pay this much to mortgage and this much to your car and this much to your credit card payments, what does that mean in the long run?
Yeah,
And just,
absolutely. Oh, go
again,
ahead, please, Amy.
communication.
Communication, always communication. Absolutely agree.
Mhm.
So let's talk a little bit for people who don't really understand how credit repair works, right? what are the fundamentals of it, right? So fundamentally, whether it's Ovation or anybody else, like what are you guys actually doing? What happens behind the scenes here?
That's a really great question, because a lot of people aren't really clear on the difference between credit repair and a debt management program or a debt consolidation program. And they're all very different aspects of business. So let me just do a brief overview. If you're working with somebody who's going in for credit repair services, that would be a company who is taking a look at your overall credit profile, finding those errors on 20% of Americans, and then assisting you with the disputing process. So good thing about Ovation is we are direct partnerships with the credit bureaus. We use their back-end systems to digitally dispute on behalf of the consumer, which allows us to have a very high level of success. If you're working with a debt management or debt settlement, that would be a type of program where they may ask you to pay them a given monthly fee, and then they divvy it out among all of your creditors, and negotiate potentially for lower payouts. Now, in the meantime, it's going to negatively impact your credit score, because they're not going to be making the full payment to the creditors month after month after month. They're going to hold that money into a bucket until they can negotiate a settled debt amount and then pay it off. So consumers really need to understand that, yes, it's better than not paying it, but it will have a negative impact in your credit. Whereas in the world of credit repair, we're not doing debt settlements. We're not negotiating terms on behalf of your credit. We are strictly disputing the information that's being reported to the credit bureaus, either directly with the credit bureau and or directly with the creditor, in order to make sure that what a potential lender sees is 100% accurate and most up to date, and gives a picture of you in the best credit light.
Yeah. That's actually a really helpful overview, and makes, I think, the distinction between what you do and what others do, I think, very clearly. I wanted to ask, right, now we've gotten through some of the nuts and bolts of this. For Ovation specifically, right, there's a reason you're at this company. There's something different about Ovation, right? There's some reason you're proud to be part of Ovation, right? What makes
So many
Ovation
reasons.
different? Yeah, so talk a little bit about, why you're different and better than everybody else.
Sure, sure. And that's such a simple conversation for me to have. Ovation's been in business since 2004, and we were founded by an attorney who focused on bankruptcy. And through all of his clients, what he found so many times when a consumer went into bankruptcy is there's information on their credit report that is showing delinquent or collections or charge-offs of accounts that they have no knowledge of, that they never applied for. And so in addition to helping them with bankruptcy, it then kind of morphed into, okay, let's look at credit repair. Let's see how we can manage to help these consumers before they get to the point of having to file for bankruptcy. So we, again, I told you we were one of just a couple of companies in the United States that have direct partnerships with the credit bureaus.
Yes.
We utilize their back-end information to digitally dispute, whereas this traditional model would be for a consumer to write a letter or go online and make a claim as to why information is inaccurate. You send information, documentation as to why it's inaccurate. The credit bureaus, under the Fair Credit Reporting Act, then have 30 days up to 45 days in order to do that investigation and get results back to you that will then tell you what their decision is and what action was or was not taken. Now, whenever we're doing it digitally, all of that information, it cuts out all the snail mail. It makes it a much faster process for us. And then we're also able to, depending upon what program a consumer selects, also reach out directly to the creditor, regardless of whether it's your credit card, your auto lender, your mortgage company. We're going to reach out to them and say, hey, we believe there's information on here that's not accurately reflecting this consumer's credit worthiness. Please take a look at this. Here's documentation to support that they did make their payments, or the balance is incorrect, or whatever that inaccurate information is, and allows them to make that quick update. So if a creditor updates it faster, then we don't have to rely on that external investigation from the credit bureaus. And then when you think about it, it's not just us helping people with the disputing process. We put a tremendous amount of focus on credit education, teaching them how to manage their credit profile, how to maximize their score, how to avoid pitfalls. And when you think about it, let's just use a college student, for example. They go out into the world, they're excited to be adults and to be on their own and start this credit journey. And they take out student loans, and then they go to Best Buy or Victoria's Secret or Target or whoever it is and apply for a multitude of credit cards. And then, oh, it's Christmas time, I'm going to apply in every store that I go to get an extra 10% off today. And they get through college, and then their student loans become due. And they're like, oh, I haven't paid it for 4 years. They'll let me wait another two or 3 months until I'm really ready to start paying. And next thing you know, they have a 500 or less credit score, and they don't understand it.
Yeah.
Well, applying for all those credit cards at Christmas time is probably one of the worst things you can do, because that 10% today is going to have a long-term impact on your credit score. From the inquiry that it takes to open the account, lowering your score, from having a new line of credit also can, on the short range, deplete your credit score, to opening up and then having a credit line to income ratio that is not in your best interest.
Yeah.
They just don't know what they don't know until it's too late. And then they're ready to go out and buy a home, and they have this mountain that they have to overcome before they can get into a position to get an acceptable interest rate that they can afford with what they've done to their credit. So we focus on education and teaching them how to avoid those pitfalls, teaching them how to manage their credit. Let's say you go out and you do get a $1,000 credit limit on a new credit card. Many people don't understand that just because it's a $1,000 limit, you shouldn't run up that credit card to $1,000. We need to focus on keeping it below $500 and, in order to prevent it from, again, negatively impacting your credit score. All of those are things that we work through. We teach people. We show them the impact that it's going to have on their credit score as well as on interest rates. And that's a huge savings, not only in the short run, but in the lifetime of your credit experience.
Wow. Very well said, Amy. I can see why you do what you do. You're a great evangelist for
I'm
the
very
service.
passionate about it and feel
clearly
that what we do, it has such a tremendous impact. And some people say, oh, but I can dispute this on my own. And yes, that is so true. Our government has protected consumers through the Fair Credit Reporting Act and allows people to dispute things on their own. But you can also represent yourself in a court of law. You can also change out your transmission if you want to.
That's right.
But do you want to take the risk of doing it on your own, or do you want to rely on professionals? We're professionals and we understand what we're doing. We're A+ rated with the Better Business Bureau, and you don't find that many times in this industry. But we've maintained that A+ rating throughout the lifetime of our business since 2004.
I think that's amazing. And Amy, look, we've partnered together, right? ListReports
Right.
has partnered with Ovation Credit, and we take a lot of pride ourselves in making sure that we only partner with not just great companies who have great products, right, but great companies who have great reputations and great service and great founding stories and all of that. And I think you've encapsulated that so well, Amy. So, Amy, as we sort of wrap up here a little bit, I want to get to kind of brass tacks, because I think what's really interesting, as I mentioned before about your service, is that given what's at stake, it's really not very expensive. That's the honest truth, right? So you've got, and maybe you can talk about the distinction in the pricing, right? But you've got an Essentials plan, an Essentials Plus plan, and we're talking about $79 a month to $109 a month, right? So I think, again, given what's at stake here, and given, the $100,000 example you gave, or even hundreds of dollars per month or year in interest, It's pretty, I think it's very reasonable. So talk a little bit about those
Yeah.
plans and the difference between them.
Sure. So our Essentials Plus plan is the program that gives us the best ability to dispute, because that's the one that allows us to work with both the credit bureaus as well as directly with your creditors. It also offers TransUnion credit monitoring. Now, with all of our programs, you're also going to get a dedicated case advisor. And this is somebody who's going to hold your hand from start to finish, really build that relationship with you, understand what your credit goals are, understand what your credit challenges are, and work with you to develop a budget, to develop a program that is going to help you reach those needs as fast as possible. With our Essentials program, the one that's $79, the primary difference is it's strictly us working with the credit bureaus on your behalf. Now, of course, you're still going to get all of the credit education on both programs, but it really comes down to what's your tolerance for time frame. An average consumer's with us sometimes between 4 to 6 months. Of course, let me give you a huge asterisk. Every credit situation is different. It may not take you that long, but there are some people who come to us that have quite a bit of issues that we need to work through with them, and that could take longer. So that's the primary difference between the two. If you're trying to get into a home pretty quickly, I always suggest that you go with the Essentials Plus program.
Yeah, that makes perfect sense. Thank you for explaining the difference there. I think you're right. It depends on the situation that you're in. It depends on, how bad that situation is, frankly, or if you have urgency around buying a home where you need to make fixes and address that really quickly. So, there's, I think, a nominal setup fee, $89. We have a link that we're going to post, right? So we're going to post a link in the comments here. And so we've got a landing page sort of announcing our partnership and allowing you to save $10 on that sign up fee. And so that's a nice benefit, I think. And so, Amy, honestly, thank you for everything that you guys are doing. I'm excited about this partnership together. I'm excited to be able to deliver this message to our agents that there's a great service, a great company like Ovation, and really using it as an opportunity, because we talk a lot about opportunities to reach out to your sphere, right? As an agent, you're supposed to be a thought leader, right, in your domain of expertise. And that's not just what homes are on the market or how to stage a home and all of that. It's also the fundamentals. And your credit score is absolutely the fundamental building block of your ability to get a mortgage and to get a mortgage at a good rate. So
Randy, one thing that you mentioned is that for all of the List Report consumers that come to us, we're going to give a $10 discount. But we're going to go a step above and beyond that.
What?
We also offer, we're all full of surprises. So we also offer a 20% discount off of the monthly rates for couples that come in, because just because one person who's buying a house has an amazing credit score, if that second person has lower credit score, that's what your interest rate is going to be based upon. So to get couples to come in that are planning on buying homes together, let's work with them together, make sure they both maximize their score. You get a 20% off. Not only that, but if you're over age 65, many people are on fixed income. So we're going to give you a 10% discount. And for all of those wonderful people who are serving to protect us and keep us safe every day, whether you're active military or retired military, we also offer a 10% discount off your monthly fees. So
that's awesome. Amy, I genuinely did not know that. So thank you for that. That's really exciting. That's really exciting. So thank you so much for that. Amy, are there any parting words for our agents out there that you want to share?
Just know, when it comes to credit, you're never alone in that battle. We're always here to help you. We are located on the East Coast, and our operational hours are from 8 a.m. to 9 p.m. Monday through Friday. If you can't get to us during the week, we're also open from 10 a.m. to 4 p.m. on Saturdays.
Fantastic. Amy, thank you so much for taking the time today and taking us through this and helping educate all of us and our agents out there. So I hope we'll get a chance to talk to you again real soon.
Absolutely. Thank you so much.
Thanks, Amy. All right. Well, see, I told you that that was going to be delightful and awesome, and that she was going to share a ton of great information. I'm really excited, frankly, about this partnership because it is such an important thing. And I'm going to pull up on the screen right now. This is the landing page. I'll post a link to this in the comments and the description. Make sure you go there. Make sure you talk to your customers. This is a great message, a very timely message, given what's going on for a lot of people out there, to make sure that they are doing everything they can to protect and increase their credit score. And again, 1 in 5 Americans, I mean, this is crazy, right? This affects a lot of people. And even if you think you have a good credit score, your buyers think they have good credit scores, I think there are clearly opportunities to increase them for what I think is actually a very reasonable price. So that's it for today. Until then, be safe, be healthy, be happy, and we'll see you tomorrow. Bye.